Conrad Saldanha is with us. Conrad, good morning. Great to have you with us here. I guess we can, as an investor, I can congratulate you and you can congratulate us because it's a happy occasion. And it's been a long time in the coming, right? Finally, it's come. Rate is good, 18%, very competitive compared to some of the other ASEAN countries, exporting countries. So what do you make of it? And let's just dive down into the market straight up, because I guess people want to know, right? Where will this show up in the biggest way? So the big beaten down, the Gokuldas and the Pearl Global and the textile apparel companies, they say, yes, I mean, it'll show up big time. It'll show up. They perhaps all open up circuit today. But where else beyond that first order?
I know, Prashant, thanks for having me on. I know there's been tons of tariff vacillation, right? And this comes as a relief. Still, there's a lot more bilateral trade agreement negotiations that need to happen. There are a few items that's on Section 232. Yes, you see, the pop with a lot of the export-driven sectors, but broader to make a meaningful impact broadly for investors, foreign portfolio flows to come in, that to also drive FDI and also CapEx, right? Domestic CapEx on the private sector side versus just government spending. I think you need to see that for a more sustained recovery, but also for earnings to meaningfully inflect apart from a pop in the 2 or 3 big sectors that are exposed. So I think you need to see it more broadened out. Yes, you are going to get a relief rally from this, given how dire it was for certain sectors. The export sectors, gems, jewelry, some of these got impacted down 30, 40% in terms of actual top line impact. So it's massive. There will be a relief, but I'd love to see this more broadly impact India, Inc., and start to bring back foreign investors in a more meaningful way from a portfolio standpoint.
That 232, Conrad, right? Section 232, what you're saying, right? So it's autos, aluminum, timber, copper, trucks and shipping. I mean, that looks like, and that's the national security section, right? So that doesn't go away.
Yeah, the Act of 1962. That's steel is also on that list, but that's about 10-odd% of that trade. But still is, it does matter. So and there'll be still the bilateral trade agreements that have to happen individually on this, because there were the tariff as well as the non-tariff barriers that the U.S. had highlighted. So there's a little bit of work to be done, but a huge step in the right direction.
And what about on oil? Because when we were purchasing Russian oil, we were getting it at a discount. Now we'll have to purchase the US and Venezuelan oil, $500 billion worth of that. Overall, in terms of agriculture, energy, etc., is the committed amount. What does that mean for India? Are we, in a way, sacrificing our energy autonomy? There is the logistics of moving to different types of crude oil. What is your view on that?
I think it's early to say, but no pun intended, but that's a crude deal. We'll see how this pans out. But listen, the refiners in India are used to processing heavier crude. And so, Jamnagar comes to mind, right? That will process the crude. Yes, there was that arbitrage, if you will, and the discount with Russian crude. Potentially that comes through from Venezuela. There'll be a bit of that being processed in the Gulf states in the US, but there's an opportunity also for India. So it's a commodity. I think India is reasonably well placed to deal with that. And I think the earlier days of the arbitrage from Russian crude that showed up in your gross refining margins, those days are gone. So I think getting access to that crude is fine, and I'm sure the refiners will figure it out.
All right. Hi, Conrad. Always good to see you, and thanks a lot for joining in. Tell us, a couple of big beneficiaries will be from the chemicals pack as well as the textiles. Do you have exposure out there, and will you be giving it a relook right now?
Nigel, not a big exposure for us. So we just look longer term. They are good businesses, and I know with the Gokuldas, that's done well. A few names you mentioned, well spun. They're well positioned. We tend to be much more on the domestic side of India. I know there's a lot of excitement about China +1 from a manufacturing standpoint, but ideally, India is a growth engine, right? When I think of the US growing now, if you know even the fourth quarter growth, at 5%, even it's 4.5%. That's super strong growth. You're seeing Japan starting to inflect. And I think India is another big growth engine of the world that I think we need to see pick up again.
Okay.
And that's why we look much more for the domestic side of the Indian market.
Right.
We will evaluate a couple of the exporters occasionally, but at the other side of this, you have the tech side, which is an exporter, right? You've got 70 to 90% of their business comes from the US or US dollar denominated, but obviously the rupee is heading the other direction, which isn't entirely helpful for them either.
All right, Conrad, since you said you're quite excited about a couple of other themes, could you name a couple of them, the domestic story, maybe data centers as well? I think we've spoken briefly about it in the past. If you could name a couple of stocks.
Yeah, we like defense, so we've been exposed to Bharat Electronics, much more on software, on the engineering side of it, rather than heavy asset with HAL. Data Patterns is a name we've been exposed to for a while again. So these are good businesses that we're exposed to. On the data centers is still early days. NetWeb is a name we've owned for a long period of time. I think there's some real estate proxies to it, but it tends to be asset heavy and not as much of tech. It's much more infrastructure plays in that regard. Still early days to that, but there's not a whole bunch of opportunities that you can get to play on data centers in India. You don't have as much of the IDC or independent data centers like you have in China, leave alone the whole hyperscalers that you have out of the US.
Yeah. Conrad, lovely. Thank you very much for joining us. And, as you were saying, right, there is this 232, etc., and perhaps autos and steel and a bunch of other things are out of this 18% number. So there's no relief. Apparently, it's a question mark, and we're trying to confirm it. So